Everybody, Joshua Phillips here with Churchill Mortgage, and it is Friday, November the 15th. Holy cow, Thanksgiving's around the corner, Christmas is not far away, but hey, we're at least past the election, which I think for almost everybody is great news. So, hey, let's jump in here to a headline. I always like to start with a headline from CNBC. This was a headline this morning that said mortgage rates may be stabilizing after the election. Here's what to expect early 2025. I didn't really get a lot out of the article about what to expect, other than just maybe rates will be more stable and not moving up and down very much. But this is what I said the last 2-3 weeks, is that maybe we are stabilizing. And so let's jump over here to our charts. So, and for some reason, when I'm running this program, it makes my computer move very slowly. So what we're going to be showing you here is a mortgage-backed security chart. Mortgage-backed securities are where mortgage rates derive their value, and every week I like to come to you with a mortgage-backed security chart. As I've said many times, every professional loan officer in America has this on their screen, and so I'm sharing that insider information with you as we look at what's happening in mortgage-backed securities. And these are what's called Japanese candlesticks. All you need to know is that red is bad, green is good, and the higher the security price, the better mortgage rates are doing. Of course, the lower the security price, the worse mortgage rates are doing. And inverse relationship there. So let's just jump in here. Boy, as you can see, we were up higher. A lot of times in my videos, I'll show you maybe a broader perspective. This is a 3-month perspective, but we saw rates get better and better up until around mid-September when the Fed cut the Fed fund rate. And then we saw mortgage rates get worse and worse. We saw rates go up at least 3/4, maybe even a full percentage point. And but since then, the last, let's see, at least 3 weeks or so, we have been hovering around this level. If you look at this little line here, it says 100.46, 0.47, whatever, right in there. We are calling that a level of support. That means that we keep touching on that. We keep touching on that level over and over again. You look at today. Oh my gosh, we dipped below it, and right now we are sitting right on that level of support. So, in some sense, that's good news. If that continues to hold, that hopefully means that rates are not going to go up higher. We saw, if we look back the last 2 weeks, we saw security prices, kind of plummet when Trump was elected. And then after that, good news, my headline last week was that mortgage rates improved. We saw things bounce back up and test on the 25-day moving average. And since then, we've kind of bounced back down. So we are in this narrow band, an eighth or maybe 1/4%, just up and down the last 3 or 4 weeks, really, where rates have not moved very much. We will eventually break out, either break beneath that line of support, or we will break up. To be honest with you, I've been doing this a long time. I really don't know which way we're going to go. And to be honest as well, I don't really know what's going to cause the market to make the rates. There's, of course, the Trump election. The Fed's trying to grapple with what that means for the economy. We got potentially tariffs. I don't know what that means. So there is a lot that I'm just going to be reporting. I don't really know what to expect. Inflation numbers this week, the CPI, retail sales, everything kind of came in line with what was expected. Inflation numbers are slightly higher, but not dramatically higher. We're still in that maybe 2.5% range for inflation. We did get the Fed cut last week. So all I can say is we are stabilizing. Rates are still probably 3/4% higher than they were a couple months ago, but they have stabilized, although we're maybe a percentage point better than we were a year ago. So, people always ask me for some perspective. It's like, well, we're better than we were a year ago. We're worse than we were 2 months ago. And things seem to be stabilizing. So that may be good news. That article said that, really that to expect, again, a more stable rate environment. So that may help you as a home buyer to feel confident that, today's rates will be there, hopefully, when you go to write a contract. I'm still hopeful that rates will slowly decline into next year. I hope so. I certainly hope that mortgage rates will improve We'll just have to wait and see. I'm just waiting to see week to week what rates are doing. I love to see us break out to that top side and kind of start trending back toward where we were and even better. So someday that'll happen. We just don't know when that is. So I'm always available to talk about your specific situation. If you want to talk to me about, we can talk about your situation, interest rates for you, what you can qualify for. If you are looking to refinance, which again, I have a lot of clients that I send this to, my own clients from the last couple of years, I would just suggest, continue to suggest patience as we wait for things to stabilize and hopefully bounce back. You don't want to have to do multiple refinances. It's costly to do a refinance, and so you really want it to be worthwhile. So if you can show some patience, I think, and wait for just a better time, I think that would be a wise thing to do. All right, Joshua Phillips here, Churchill Mortgage. Have a great weekend. Take care. Bye.